following is a paid advertisement program provided by Premier Investments and Wealth Management. An airing of the program is not to be considered an endorsement or recommendation. The opinions expressed are those of the hosts, guests, and callers, and not necessarily of this station or iHeartMedia. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA SIPC. The opinions voiced in this show are for general information purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial or tax advisor prior to investing. The information in the following program should not be construed as an offer to sell and is not intended to replace the advice of a qualified tax advisor or legal counsel.
Hello there, and welcome to yet another edition of the Premier Investment and Wealth Management Financial Program. My name is Doug Wagner. I'm the host here. Going to introduce a couple of gentlemen in a matter of seconds who will walk you through balancing risk and reward in investing. But a reminder to you, if you were listening or watching this or however you're doing it on your phone, on your tablet, on your laptop, or maybe even your desktop, open up your favorite browser and point that URL to premieriwm.com. When you get there, click Get Started. You just have to answer a few questions to find out, am I ready for retirement? Am I ready for whatever the future has in store for me as far as my money, my investings, and what I want to do with my hopes, my dreams, and maybe even create a legacy? Premier IWM click Get Started. You'll get the one-page Premier Vision document. Just that easy to do so. Or you can also make an appointment online, premieriwm.com, or you can call 800-383-6590. Now, with no further ado, introducing the new sheriff in town. He's Vice President and Wealth Advisor at Premier Investments and Wealth Management. Hello, Elias Randall.
Howdy, Doug. Good to see you.
Good to see you as well. Had to put on a cap to keep my head warm.
Yeah, it's a little cold out there.
Yeah, I know. Wintertime.
It is
man.
wintertime.
It's something else. So.
Ouch.
It doesn't matter where you are, too. It's cold everywhere, except for where this guy is. He's the President and Wealth Advisor of Premier Investments and Wealth Management. Over 21 years of experience in the financial services industry. Accredited investment fiduciary. That's what the AIF stands for. You're going to need a bigger boat. The big kahuna, Roger Abel.
Hey, Doug, how are you?
Doing good. Doing good.
Good.
Like the sweater.
Hey, thank you. I was going to make a comment on your outfit.
Oh, yeah.
I like it. It looks like you're ready to go play some golf.
Yeah.
Like 1942.
That'd be fun. Yeah, boy, I can tell you what, that would be rough right about now.
But is there a theme behind
this?
Yeah.
Oh, no. Next thing in the closet.
I just didn't know if there was like a golf. I don't follow golf.
I
didn't know
I've
if there
got
was
the
like
golf
a match.
slacks. It's
Yeah,
funny.
you look like there's a big golf tournament getting ready to start.
And I've got sharks. And yeah, this was kind of funny.
man.
So maybe it was just his serendipity. Life set me up for that. So.
You know, it's interesting. Our friend Chris McNeil down in Dallas, did you happen to see the picture that we posted on Facebook?
No, I didn't, but I've seen some of the videos with the outtakes between us.
Well, his kids built a snowman. We're yet up in Iowa to build a snowman, but our Dallas advisor, Chris McNeil, his family got to enjoy the snow and actually enjoy it. My girls have asked every day, when are we going to get snow, Dad? Because they want to go sledding. And it's been a rough couple of years in the Midwest for snow accumulation, unless you're south of Missouri. Missouri's been getting pounded too.
I know, exactly. South of 34. But remember, last January, I was in Hawaii, and you guys got like 2 feet of snow. So
yeah, I remember.
I recall it was 2 weeks. I remember that too. So in any case, sorry about that. Here's hoping for a little snow or lack of it where you are, whatever you desire. Let's talk a little bit about balancing risk and reward in investing. There are some underlying questions we need to answer about this so that we have a really good baseline knowledge of what we're talking about here. Let's talk about asset allocation. What does that mean, Roger?
It's really the process of dividing your assets up between different asset classes. And, one of the things that we believe is inherently important is that people get their asset allocation correct.
Right.
And historically, there's been two ways to build an asset allocation. And most people have always subscribed, and I think Elias would agree with this, to the idea of, you do a risk tolerance with someone and they tell you how they feel about investments going up and down. And that's one way to do it, is through a risk tolerance. So, someone might go through a questionnaire, and through the process, it comes out that they should allocate 60% to stocks and 35% to bonds and 5% to cash, for example.
Okay.
Based upon their risk level.
Right.
We've really transitioned more to how do we quantify somebody's risk capacity. And it's different than, their appetite for risk. Risk capacity is the thought of what portfolio gets us to an optimal outcome in retirement. And what I mean by that is you could have a person who has zero propensity for risk. And as we go through the financial planning process, the zero risk appetite has a probability potentially of zero.
Okay.
If I go through this process and show an individual or family that if we have a 60% exposure to stock, it increases your probability of success in retirement from zero to something greater, let's say 70%.
Okay.
Many times that individual is happy to take that optimal portfolio and implement that suggestion. And part of the reason is most people don't understand our industry. We made it fairly complex for people to understand. And when people don't understand how something works, what's the default option?
Conservative mode.
Yeah, we all go conservative.
Safety. What feels comfortable.
100%. And so we default to no risk. Once we understand why we're taking the risk, then what happens?
You have more confidence. Well, and you can make a more educated decision.
I think you hit it on the head. You literally took the words out of my mouth. It's confidence.
Okay.
If people understand why they own something, they're confident. And I can go through, and I know you can attest to this, Elias, because we have several individuals who every time the stock market goes down, what's the call? Should we go to cash?
Yeah, it's the time to go to cash.
And what's our proverbial answer? I don't know.
Let me model this all cash scenario for you and see how it works out.
Yeah.
I mean, we have one individual who, every time.
Oh, yeah.
And every time he's done it, the probability goes from about 75% to zero.
Mm-hmm.
And
He's gotten better the last couple of years, though.
Well, after the last one, he told me he was never going to call again, and he hasn't.
Right.
He's
Call
like,
on that. But
call on that. Because he did it in 2017.
Right.
He did it in 2020. He did it in 2022. And every time, legitimately, his probability went to zero if he just went to all cash.
Yeah.
And he's like, well, I guess I'll just stick it out. And it's paid off every time. So after the last time, he said, hey, I'm never going to call and ask if we should go to cash because he knows our answer. But let's flip the scenario. We haven't done this financial plan for this individual. We have no way to give him confidence as to why he is in or she is in the portfolio that they own. Well, what happens then? Should we go to cash? Well, I don't know. Or you're talking them into, well, we're in it for the long term. Let's just stick it out. That doesn't give people or inspire confidence in people. So that's how we arrive at that asset allocation for most people is, hey, let's help inspire confidence in where you're going so that you have some meaning as to why you own the investments and you're less likely to bail out in times of chaos, because there's going to be chaos over the next, however, there's always some level of chaos somewhere.
Yeah, absolutely. And there's investors who have had good investor behavior, like all the years you just mentioned. They've been rewarded for sticking the course, right? And this particular individual has been rewarded for sticking to the plan and staying course, but it was easier, maybe not emotionally easier because no one likes it when their account goes down, but with a level of conviction and with reasons. The other thing we know is clients, they need reasons to do things, just like anybody, right? Like if I say, hey, Doug, you should do X, Y, Z, but I don't give you any reasons why you should do X, Y, and Z. How compelled are you going to feel to do that?
I'll do it because I know you and I trust you, but I understand
just
what
blindly.
You mean. Absolutely. Well, you've got a fiduciary responsibility. Absolutely. I understand what you're saying, though.
Okay, right, and that's right, and that is great to get, and that's great to get to that place, and a lot of times we do with a lot of our clients, but there's still always
it's an opportunity to educate them too.
Yes, it is.
Yeah, that makes sense. Premier Investments in Wealth Management and Financial Program. You can make your appointment online today by going to premieriwm.com, or what's the phone number that people call in case they want to make that appointment today?
It is 800-383-6590.
Talking about asset allocation and some of the basics of this whole thing, the major asset classes are stocks, which of the group is the most risk caring of all of them. Bonds, they offer a little bit more stability and predictable income, lower returns, but it balances the risk of the overall portfolio. And then cash or cash equivalent. These are the things that are really liquid, low risk, not a whole lot of return, things like that for emergency savings or short-term needs that you have. Let's talk a little bit on mutual funds too, because it combines the best and worst of these, because you're buying, as Jonas Everett would say, you're buying the haystack, not the needle itself in that case.
Yeah, yep. That is one of the key things. When you're buying a diversified portfolio, you want to buy the haystacks as opposed to the needle. So, and I just have a couple things to comment on for asset classes. So stocks, and you mentioned, right, higher potential for growth, but there's also a higher potential for volatility. I want to reiterate, though, that in the short term, there is a lot more potential for volatility, but one of the biggest things an investor can do is stay invested. No matter how you look at market data, the way to overcome the fluctuations is time.
Yeah.
Keeping your money invested, having good behavior. Because if you look at a stock chart of the S&P 500 and you go back 50 years, 100 years, the volatility over that time looks less significant than if you just look over 2-year, 3-year, 4-year, 5-year periods. So one way to mitigate volatility in that asset class is your money invested there, is invested for growth, and you're going to stick with that for longer periods of time.
I have a great example of that. I was looking up, I typed in a ticker symbol this morning into Google to look up the performance. And I kind of thought I forgot it was 2025. So I said, what's year to date? And the chart goes like this, and it's a straight cliff down. I'm like, man.
What happened?
But that's exactly what I thought. I'm like, oh, I'm on the 5-day chart. Then I pulled out the year, and it looks, it's just a nice gradual line up over 5 years. Whereas this 5-day blip, it literally is like a straight drop in the price. I'm like, what in the world happened? And then I looked at, once I figured out that I was looking at a 5-day chart. But to your point, if you went back and looked at the trend line of stocks over the last 100 years, it's just a gradual line up. But if you were to take the small microcosms of 1 year or 6 months, it'd feel a lot more scary.
Yeah. You get a lot more stair-stepping kind of thing.
Do you ever feel like your financial goals are just out of reach? It's time to take control of your future with Premier Investments and Wealth Management, your partner in financial independence. Imagine a financial plan that's as individual as you are. At Premier Investments and Wealth Management, our team of experienced advisors will work closely with you to create a roadmap tailored to your dreams. We'll help simplify complex financial concepts, provide clear guidance, and empower you to make informed decisions. Financial wellness is within your grasp. Visit www.premieriwm.com to schedule a meeting with an experienced advisor today.
So we talked a little bit about what asset allocation is. Let's talk about personalizing asset allocation, how you do this with each individual client that comes in, because that one-page Premier Vision document is not a cookie-cutter approach. It's like a fingerprint. Everybody's got their own.
Yeah, I think I think the first thing we do is we kind of look at where people are in their investment journey, where they are from a financial standpoint, meaning, are you an accumulator? What age are you? 20, 30, 40? That's the first step. Like, what is your retirement age and where are you at?
Yeah.
Because the earlier you are, the easier this gets. And why I say that, the earlier you are, it's just more about time in the market versus the way your assets are allocated. The closer you get to the actual retirement date, things get a little dicier because now you have to start putting together a distribution strategy. So I think the first thing we do for everybody is we try to break down during the financial planning process, what are your goals? And give the money responsibilities. For example, if you've got a pile of money, non-retirement account, why do you have $100,000 of cash? That's the first thing you have to figure out. If you have $100,000 of cash, what's it for? Is it for a house? Is it for emergency? Or is this something you plan on for retirement? So we just start to break down what some of the individual goals and priorities are. And, as we go through that, we start to implement things like the Premier Bucket strategy.
Okay.
And for people who don't know what that is, that's really just taking the results of the financial plan, which is our optimal portfolio. So let's say it's 60% stock, 40% bonds, and then figuring out if we're entering retirement, how much we need to have liquid. What are the events that are going on? Okay. A lot of times this happens. Someone will come in the office. I plan on buying a car next year. Great. They say, when should we, get the money? I said, we should put it in cash now because you already know
when you're going to spend it.
Yeah.
There's a defined timeline.
It just turned into a short-term goal. Like they maybe don't see it as a short-term goal or they want to get more out of the market. But once you know you're going to buy it, you have a short-term goal. So you need to assign the money a short-term responsibility.
Yeah.
Well, and that's the two most basic questions any investor can ask when you're looking at investments. What is my capacity for risk here, and what is my time horizon for these dollars? Right. So a lot of retired people and folks in retirement, they will have bigger purchases. Right. Like a lot of times you ever hear someone say, well, I'm going to buy this new truck because it's the last truck because they're going to retire.
The last truck I'm going to have.
I've had the story. My dad just bought his last car.
Yeah.
Sure. He's what, 65?
He might actually.
Well, maybe. But, and this last year has been a great example. Like I have a family I work with that in their retirement, they've started doing the ATVs and the side-by-sides.
Okay.
Which, if you want to get a nice one and you need a trailer, it's about $50,000 to get into something. And they're as nice as vehicles now too, right? Mm-hmm. Well, when they're asking me about purchasing it, right, that was one of the things is, well, this money now is a short time horizon. Hey, fortunately, the market's up 20 or 25%, whatever it was. Last year was a great year in the market. So we're going to sell some winners. We'll just set this in cash. And then when you're ready to go buy it, it's there and it's ready.
Yeah.
And that's just good behavior. And that's a good decision. And really you're going to make that purchase with gains in your portfolio. So you should feel really good about that.
That makes sense.
And here's what's good about that. Most people, because we've had 2 really great years in the stock market back to back, inherently they don't want to sell it right now.
Yeah.
Because, man, what if it went up another 5 or 10% by the time I sell it? I would have paid for the thing again. The problem is, if the stock market were to go down 15 or 20% between now and the time they wanted to buy that, there's a chance as a retired person, we've watched this time and time again, they wouldn't actually go make that purchase. They'd hold off because the market was down.
They would delay the purchase.
They would delay the purchase.
Which
so
now you're delaying lifestyle. And it's like, it's just that's not a great outcome.
I think there's one thing, too, to kind of frame as a reference as we talk about time horizons. Time horizon is not like when you retire, right? That's not the end for people. When we say time horizon, people are like, well, I'm retired. It's all got to be safe. That's not true. Most people are going to live 20, 25, 30 years in retirement. So your time horizon is actually when you're going to pass away. I think I told you the story. I was with a friend of mine and we were talking about a stock and he's like, yeah, if I had a longer time horizon, I think that'd be a really great buy. And I'm like, well, you're never, because he's going to retire in like 5 years. I'm like, well, yeah, but you're never going to spend everything you have. So arguably the time horizon for that stock is the life expectancy of his kids or when they're going to need it.
Right.
And he looked at me, he's like, I never really thought about it that way. You're right. Yeah. Like I just said, you just haven't given your money responsibilities yet. So if you're going to buy this individual stock that maybe has a 30-year time horizon on it to make it come to fruition, well, that could go into your legacy bucket of this, this premier bucket strategy. Hey, I'm buying this for my kids because I think it's a great investment.
See, this is why you need a wealth advisor, and specifically Premier Investments in Wealth Management. Go to premieriwm.com. There you can find out a lot more about what they do, download the downloadable information. They've got links to all of their resources that are out on the internet as well. Roger Abel, what's the phone number in case people want to make a phone call and make that appointment today?
800-383-6590.
Got you about 10 minutes left in the program here. We want to talk about the asset allocation. And for you, Elias Randall, there are certain events that happen that are like trigger events that say, hey, maybe it's time for us to revisit the asset allocation under which we're working. What are some of those for you?
Well, the big ones, marriage, maybe having kids, job changes, those are pretty standard. The biggest one and the main reason I think most of our meetings happen with potential new investors is a lot of times transitioning into retirement. It's either young people that have been really responsible with their money and they want to figure out how to fine tune what they're doing and be a little more goal oriented with it. Or people, hey, I'm going to retire in the next 12 months, 3 years, 5 years, because the retirement, that's a really big decision. And for a lot of people, saving the money's been pretty easy. Set up the 401k with the options available in 401ks now. A lot of investors, I've had so many people tell me, well, I just started doing this and I've never made any changes, and it works out great for them over time. But a lot of times what they're looking for is that new asset allocation, and how do I spend this money? How am I going to be invested so I can take it out and enjoy it now? So that's a major event when people come to see us.
Well, we highlighted what the other major events are. It's typically downturns in the market too. When the market goes down, it's almost like people are forced to revisit their asset allocation, not because they want to, but internally they're like, man, am I doing the right thing?
Yeah.
And that comes back to building that confidence and conviction in people. And it is a good time to revisit your allocation. But you know another great time to revisit your asset allocation?
When?
Right now. And here's why. If you in 2022, you didn't sell anything, you didn't make a bad mistake, you didn't get out of the market, you happen to stay invested, but you were scared of what happened in 2022. You've had back-to-back years of up 20% gains. You made all your money back if you didn't do anything. If you were scared in 2022, you should be revisiting what your asset allocation is, making sure it's appropriate, understanding why you own it so you have conviction and confidence going forward. Because there's nothing saying that's not going to happen again. In fact, it is going to happen again. We just don't know when it's going to happen. So the best time to revisit this is when things are going well.
Yeah.
Be proactive instead of reactionary.
It's funny because that's when most people, it's kind of like, that's when most people put it on autopilot, is when things are going well, when there's no big deal. When the big storms hit, that's when they just grab a hold of the wheel and start jerking it around all over the place to try to make the changes rather than just focusing on slow and steady. Here's what the goal was. And you plan these things. When you do them, you do all sorts of scenarios for people so they can see what it looks like in a wide variety of market situations.
For sure we do. And just think about, it's human nature. This isn't specific to anybody. When things are going really well, nobody wants change.
Right.
Like your risk appetite goes up when things are going well. That's why we get boom and bust cycles, right? Things go well, people want more of it. I don't want to miss out.
Right.
When things go poorly, man, we're out.
You're okay missing out.
Hey,
run away.
The old adage is, the stock market is the only place that when there's a 50% off sale, the parking lot is empty.
Yeah.
Think about it. If you went to Dick's Sporting Goods or wherever, 50% off everything.
Yeah.
You're waiting in line and they're going to sell out.
Oh, yeah.
But when the stock market's down 50, the parking lot's empty.
Yeah. And that's the whole thing, is like, I forgot who said it, but I heard it on your guys' program, first time ever, is that the best time to hit the market is when the blood's running in the streets, because that's when you're going to find your best bargains. Coupon clip and save, man. I'm telling you, for people who you like clipping coupons, it's a perfect opportunity to do stuff like that.
Well, and here's the things we hear when bad things happen. Well, this has never happened before. Well, every time, it's like COVID, it never happened before. But if you go back through history and look at all the times it never happened before, the end result kind of turned out pretty similar.
Yeah, it did.
I mean, Elias, what was the quote you came up with?
For what? I've had a lot of quotes over the years.
Yeah, it's about
word on the streets. They make a lot of good financial plans.
No, the one where if you're betting against the U.S. economy.
Oh, maybe something along the lines of, like, if you're not going to participate in the market, you're betting against the biggest companies in the whole world, and you're betting against the economy of the country, which in any given year may be a good bet,
but you're in the long term. That's the whole thing. And this is the key thing about all of this, is that you're talking about managing and adjusting over time. Have you ever had somebody, we're going to wrap up here in the next 5 minutes. Have you ever had anybody come to you and say, hey, we're going to go ahead and we're going to assess these plans, but I want you to take that money off the table. Just act like that money's not there.
For what?
For anything. When you're doing a reassessment and you're reviewing accounts with people, do you ever have them, or do you say, hey, we got to see how that fits in with everything else, otherwise we don't have a complete picture?
Yeah, we do. I know exactly what you're asking.
Okay.
Hey, I have, this $400,000 I'm not spending.
Yeah, just act like it doesn't exist.
It happens all the time. All we do in the software is just say, hey, this $400,000 we're not going to use in the plan.
Okay.
And it assumes we're not going to use it for an asset allocation.
Right.
So, good example. We're doing a plan if someone has college 529 savings accounts. Well, we don't use that as part of their financial plan. We inventory it, but it says right there, not used in plan. Your bank account, we'll exclude it from the plan.
Your day-to-day bank account.
Yeah. So let's say you keep $100,000 in your emergency fund, and that's what you have to have. We exclude that from the planning because we know you're not going to invest it. But I think there's a flip side to what you're asking. Let's say, let's play a scenario that happens a lot.
Okay.
Someone comes into our office and says, hey, I'm retired. I'd really like to have a second home. Well, guess what we get to do? Well, how much is a second home?
Yeah.
Okay, it's $600,000. Great. We're taking $600,000 out of your portfolio today. Let's see what that does to your retirement.
Okay.
And then you can add in there, what are the costs that it's going to take to upkeep this? What are the HOAs? Or all these different fees? And we help people make good decisions. It takes me back to an individual who inherited a house from her dad. And she really wanted to keep it. But they asked me, because they know how I do this, they said, can we afford to keep this and retire how we want?
Right.
So we went through, we nailed down what the expenses, the taxes, everything were. We got through the process, and unfortunately I told them, I said, truth be told, I think you should sell this house. Even though it was a paid for house,
right.
I said, I think you should sell it. I think it puts your retirement not completely at risk, but it's not going to be as comfortable as you'd like it to be.
Yeah, it drags you a little bit.
So we were able to make that decision based upon evidence versus me saying, well, it's a paid for house, it should work out. People forget about the taxes, the insurance, the HOA, all the other things that go with it.
Right. This is something that's really important, and we just got a couple of minutes left to hear, Elias, is the whole point that financial advisors can help do for people what they don't have the time, talent, treasure, desire to do. And it includes things like give me an example of the three main things that will help you do as far as having a financial advisor to help you inventory your financial future.
Well, there's a lot of things. Really, one of the basic things is just clarify where you stand today and kind of the path you should be going down. One thing we believe in is just developing unique and tailored strategies. So every family's relationship with money is different. Their appetite for risk is different. So just kind of shedding light on, if I were you, this is the way I would approach this. Right? Because what works for Doug and what works for Roger may not work for me, and it may not work for someone else.
Right.
But there should be a way to kind of just reassess everything, and then get you in some strategies and get you to a place where we can manage volatility in the portfolio. We can get you the money out that you want to spend, and just make sure it's a successful, enjoyable experience for you.
That works perfectly. Premier Investments and Wealth Management. You can find them online at premieriwm.com. Click Get Started. Answer a few questions. They'll provide for you an opportunity for an appointment and that one-page Premier Vision document. You can also make a phone call and make your appointment today. Roger, the number is
800-383-6590.
For Roger Abel, for Elias Randall, my name's Doug Wagner. We'll talk to you next time on the Premier Investments and Wealth Management Financial Program.
Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA SIPC. The opinions voiced in this show are for general information purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial or tax advisor prior to investing. Premier Investments and Wealth Management and LPL Financial do not provide tax advice. Please consult your tax professional. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. There's no guarantee that a diversified portfolio portfolio will enhance overall returns or outperform a non-diversified portfolio. Diversification does not protect against market risk. All performance referenced is historical and is not a guarantee of future results. All indices are unmanaged and cannot be invested into directly. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to affect some of the strategies. Investing involves risks, including possible loss of principal.